I'm Oliver Soap with Blue Line Futures here at the Chicago Board of Trade. And instead of doing a tech talk today, we're just going to be talking with two guys that have a great deal of trading experience, and they've successfully made that transition from the floor to the screen. They've also played a big role in getting our Ag Alerts program off the ground. They run their own CTA, or commodity trading advisor, called Caerus Capital Management. So without further ado, why don't you guys go ahead and introduce yourselves and give everyone a little bit better of a background on Caerus and your trading experience.
So my name is William Johnson. I started trading at the CBOE in the early 90s and traded in equity option pits until about 2003-ish, and moved over to the Board of Trade and traded specifically in the soybean option pit.
And my name is Matthew Stankiewicz. I started at the Board of Trade in 2005 and started trading in the soybean options pit in 2007. And Bill and I traded together in the options pits basically until they closed. Well, they're not really closed now, but in all intents and purposes, all that market has moved off the floor. So we traded there, and just recently, a few years ago, moved our operations off floor. And once we moved off floor and started focusing on electronic trading, we really had to refine our strategy to the most profitable elements of it and kind of filter out what was just noise, because there's a lot of trading going on the floor. So kind of in the evolution of that is where we developed our Caerus CTA program, taking the best parts of our trades from our floor and really refining our options experience.
The only other thing I would add is that the transition that we had to make was transitioning from market making in a pit to managing a fund. And that all came down to refining our strategy. Instead of trading all the trades that came in, we look at what our strategy is and we try to execute those trades.
Good stuff. Now, this next question or complaint is something I hear all the time, and it's with regards to options. Now, you guys have been able to develop a good track record trading options, but a lot of retail traders and hedgers have a bad taste in their mouth from options. Why do you think that is?
Okay, so that's a really good question. When you talk to people, a lot of them do have bad things to say about options, or on the whole, they just stay away from them. And that's for two reasons. First, most people either trade options from the long side or the short side, and there are problems with each in and of themselves. So a lot of times in the news, when you hear people trading short options, the big stories that always make the media, the press, are people who have blown out from options, right? They get short, the market moves rapidly through their strikes, or volatility explodes, or both, and they end up losing more than 100% of their investment. And so from the short side, there's a lot of risk to taking options. But you also hear the statistic that 95% of options settle out of the money. So it seems attractive, but it exposes you to a lot of risk. When you get long options are just really hard. You have to be right in three ways: in timing, direction, and speed of the market. And most people can't do all three of those. And it's a really tricky thing to do. So if you're right on two of the three, your best case scenario is probably a scratch. So a lot of money is lost in long options, and specifically, the story we hear a lot is on the put side, right? People buy puts expecting the market to break. They buy the puts, the market breaks, the value of their puts go down, and they don't really understand why. And a lot of it has to do with volatility. There's a lot of variables in the options market, and it just takes a lot of experience and understanding and time and exposure to it to really fully embrace and understand.
I think you knocked it out of the park with that answer. There's just so much more to options than a lot of people understand, which kind of leads me to my next question. I've been in the business for a while now. I've worked with a wide variety of clients, from novice traders to floor traders like yourselves, but we also have many clients who like to do things on their own, and that's okay. Listen, I get it and I respect that. So we set them up with the easy to use trading platform, good margins, competitive rates. They like knowing that they have us in their back pocket when or if needed. But do you think that there could be a benefit to having someone else manage a small portion of their portfolio as a means of strategy diversification?
Well, I think that totally speaks to question two, where people get so frustrated with the ability to make money in options. Now, we've been doing this for a combined 35 years. Our experience is in equity options and agricultural options. Right now, our CTA is focused on agricultural options. We look at these markets: corn, wheat, soybeans, soybean meal, soybean oil, and some hogs and meat. Every minute of the trading day, we're looking to take advantage of any skew opportunities that arise. This is what we do for a living. So we are experts in analyzing markets and making correct decisions to implement trades and profit from them.
Right, and there's just so many opportunities out there and so many markets out there that any one person really can't be exposed to all of them. So that's why managed futures and managed accounts are a great way to take advantage of the experience that these managers bring. And you can really diversify yourself and your portfolio that way and really expose yourself to some ideas that you may not even know are out there. Specifically with our program, what we look to do is bring you that experience that we had on the floor, where we can identify undervalued and overvalued options, and we spread them against each other so that you get the best of both of the options world, right? You get the exposure of the long side and the decay of the short side without any of the inherent risk of being net short options. With our strategy, we're never net short options, and our focus is always on the risk management and the maintenance of the portfolio for the investor. We utilize a very low margin to equity ratio, usually around 2% at a max of about 10%. And we seek to close the gap between the discrepancy of the overvalued and the undervalued options.
I think those are great answers, and I often joke around with guys. That's like if I broke my leg, I'm not going to slap a Band-Aid on it and call that puppy good. No, I'm going to go get help. I'm going to go to a doctor, someone who has experience, to get me healed and get me back headed in the right direction. And it's a lot like investing or trading. A lot of our clients like to know that they have us in their back pocket to use as little or as much as they need. And you guys have an extensive track record yourselves, and I think it makes sense for people to at least consider having a portion of their trading or investing portfolio in something that might be uncorrelated to what they're doing, to just kind of spread out that diversification in their portfolio. So this has been great, but before we wrap up, I just want to ask one more question. If you guys could offer yourself one piece of advice, your younger self, one piece of advice, what would it be?
Buy Bitcoin. No, seriously, I wish I did, but I didn't. I think I would have liked to. We were floor traders, and we're making good money, and I would have said to myself, look beyond the next 5 years and realize that the pits are not going to be as relevant as they were when we first started, and I would have said make the transition to a managed fund format earlier.
Yeah, and for me, I'd say kind of thinking about that long-term aspect of it, I wish I would have started really focusing on the trades in my portfolio earlier, really coming up with a system, a regimented system to follow. It really wasn't until that move off floor for us that we really focused on a strict risk management, position sizing, systematic approach to trading. And the sooner you come up with that, I think the sooner, the better your ability is to manage risk and manage your trades.